Hi guys, this is Dan from the Investment ABC, and in this video I want to analyze the Nio stock, a Chinese electric vehicle maker which is branded the Tesla of China. Guys, always be careful when a stock is branded as so-and-so of China. Don't fall for the hype, do your proper due diligence, especially when people claim that the stock might be a scam. So let's start. When checking a company, the first thing I do is checking their website and taking a close look at their management. Their website looks pretty decent to me, but I couldn't find any information on LinkedIn on what the management was doing before founding the company. But I checked the information on the website and could verify it. The founder is William Li, or Bin Li, who currently also serves as chairman of the board of directors at Bit Auto Holdings Limited, a New Stock Exchange listed automobile service company, and is also the co-founder of Bit Auto e-commerce. Bit Auto Holdings was listed back in November 2010 and is still listed there as of now. Mr. Li also co-founded Beijing CNI Advertising Company and currently serves as vice chairman of China Automobile Dealers Associations and was one of the top 10 most influential and distinguished people in China's automobile dealer industry in the past 20 years. I am happy to see that he has a lot of experience in the automobile industry and also marketing. I watched his presentations of the Nio ES6, and Mr. Li makes a pretty good impression to me while speaking to the public, though his interviews in English are pretty hard to digest. According to Forbes, he has an estimated wealth of $1.1 billion, so I don't think he really needs the money to scam people. For those people who think that Nio is an outright scam. The second founder is Li Hon-kin. Mr. Kin worked as a consultant for Roland Berger in the automobile industry and has also marketing experience which he gained at Procter & Gamble. The CFO is Louis T. I hope I pronounced his name properly. He held senior executive positions in private equity and investment banking with UBS Capital, JP Morgan and Credit Suisse, and served as a corporate and security law attorney at White & Case LLP. I saw some of his videos in CNBC and he makes a really good impression to me. Also, his interviews are fluently in English. Xian Song Cheng is the co-founder and the executive vice president of Nio and has worked for Fiat and gained a lot of experience in the automobile industry. To me, he looks more like the brain of Nio, but Mr. Li is more the face of Nio, but it's just like my opinion. Overall, the management seems more than competent to deliver on their promises. The company Nio, also known in China as Waylay, was just founded in 2014 and the IPO was in September 2018 where they raised around $1 billion. The IPO price was $6.26 and the company achieved a valuation of above $6.4 billion. Despite its young age, they introduced its first car, the EP9 supercar, in 2016, which is the fastest electric car in the world so far. They are just selling a few of these super sports cars, but at a whopping price of $1.48 million. From June 28, 2018, they started to deliver their ES8, a 7-seater SUV which has a starting price of 448,000 yuan before government subsidies, or currently $65,200. They are also planning to deliver a 6-seater version for 456,000 yuan or $66,381. I watched some testing videos about the ES8 and I am quite impressed, to be honest. The car was designed in Munich, Germany by a former BMW designer. It has 600 horsepower, 2 electrical engines and an acceleration speed from 0 to 100 kilometers in just 4.6 seconds. And 335 kilometers in range. The overall interior and exterior quality of the car looks very appealing to me. On top of that, the car comes with a new feature called Nomi, a device similar to Amazon's Alexa. It is the first in-car AI system for production vehicles that brings together music, services, software, and hardware and makes the car to your individual friend. It is nice to see that Nio is integrating AI features into their cars, which makes it kind of special. If Nomi is well functioning, it could be a big selling point for Nio's cars. Last month, Nio introduced the 5-seater, the ES6, and potential customers can order the ES6 as of the 15th of December and expect delivery in June 2019. The starting price for the ES6 will be 358,000 yuan or around 52,000 US dollar before subsidies, and 300,000 yuan or 43,500 US dollar after subsidies. The ES6 has a longer range than the ES8 with 510 kilometers. It has 544 horsepower and an acceleration time of 4.7 seconds from 0 to 100 kilometers. The ES6 is going to be one of the first Chinese electric cars with a range of more than 500 kilometers, rivaling the range in Tesla cars. We can see that Nio's cars are way cheaper than Tesla's, but on the other hand can keep up in design and interior quality. The new ES6 can even keep up in range with the Model X and also has autonomous driving. The ES8 has also autonomous driving. Furthermore, it has Nomi as an integrated AI system, which Tesla doesn't have. Nio is also providing battery swaps, which Tesla thinks is not worth doing in bigger scales. On top of that, Nio gives the customer the possibility to book a charging truck via mobile app. These charging trucks are also electric cars with a range of 150 to 170 kilometers. The trucks can charge your car in 10 minutes, so you can drive another 100 kilometers. This service costs around $25 and is also available for everyone, not only Nio customers. Nio currently is not manufacturing their cars themselves, but rather have a joint venture with state-owned Jack Motors for 5 years. Jack Motors has 50 years of experience in manufacturing cars, therefore also enough capacities for the increasing demand for Nio's cars. Nio is planning to build, similar to Tesla, their own manufacturing plant in Shanghai in 2020. Who are the main investors? The main investors are WeChat owner Tencent, which is holding 137.2 million shares and a stake of 13.4% in the company, and Bailey Gifford, the second largest holder of Tesla stock, with 85.3 million shares, which give them a stake of 11.4% in Nio. The CEO, William Li, is the largest holder of Nio shares with 148.6 million shares. I really like when the CEO and founder are one and the same person and at the same time hold a lot of stake in the company. That means he got great incentive to do the best for his company. Its other backers include investment firms Hillhouse Capital Group, Sequoia Capital, and the private equity fund established by Baidu Inc. Nio has undoubtedly strong backers, which gives small investors more confidence in the company. Who are the main competitors for Nio? There are a lot of companies trying to get into the expanding Chinese EV market. For example, Tesla with their Model S, X, and 3, BYD backed by Warren Buffett with their E6, which has a range of 300 kilometers and a starting price of 310,000 yuan before subsidies. Geely with their crossover M Grand GS, which has a 460 kilometer range, nice design with costs of 228,000 yuan or approximately 33,200 US dollar before subsidies. After subsidies, it will only cost 121,000 yuan or around 19,000 US dollar. Hong Kong's Byton, founded in 2016 by BMW and Nissan executives, will launch the EV car in 2020. Xpeng, backed by Alibaba, has the G3, which will be available for 200,000 yuan or 29,000 US dollar and has a range of 350 kilometers. There are also more competitors like Chery or Faraday and many others. As we can see, the competition in the Chinese market is going to be fiercer in the next years, but as far as I can see, Nio is competing with Tesla for the higher end of the EV market, while the other Chinese companies concentrate for the lower end for now. The question is if Nio can gain market share from Tesla in China, and in my opinion, they can achieve that. The reason for that is that Nio's cars have a high quality unlike other Chinese cars, very appealing design, and are the first cars with an AI integrated system with Nomi. On top of that, they can compete in range and performance with Tesla, but are significantly cheaper, especially the ES6. And therefore more affordable for the increasing Chinese middle class. Furthermore, the US-China trade war is benefiting Nio in case the Chinese government plans to slam the US car makers with an extra 25% tariff again. The longer the trade war continues, the more likely companies like Apple and Tesla will lose ground in China. If the trade war intensifies, it can lead to a more national thinking for the Chinese consumers and really hurt the revenues of American companies. Let's check some numbers now. If we look at this chart, we can see that in the end of the third quarter of 2018, 4 million EV cars were sold globally already. The EV market is growing faster each year and 40% of the sold cars goes to China. The EV market has a huge potential and will grow a lot in the next years. China is leading the global EV market, while other countries are panicking to miss that trend and therefore will increase their efforts to catch up. I am thinking, for example, about Germany as one of the leading countries with the best engines currently. Their automakers missed the trend to electric vehicles and now are trying to catch up with Tesla and the Chinese. When we have a look at Nio's numbers, we can see that the company clearly burns money currently. But that is no wonder when we think that the company was founded only in 2014 and had their IPO in September 2018. If we look at the numbers, we can't put too much weight on the numbers of the second quarter of 2018 because the second quarter only contained 3 days in June. So we have to look at the change from the third quarter to the fourth quarter to have a clue if numbers are improving. In the third quarter of 2018, Nio had around 1.5 billion yuan, which is approximately $214 million in revenue. The gross margin was a negative 7.9%. Loss from operations and net loss was each 2.8 billion yuan. That is a huge loss for only one quarter, guys. Some of these operational costs were one-time events because of the increased development expenses of the ES6 and increased share-based compensation expenses related to the stock options granted to the company's non-US employees. Although the numbers look pretty horrible, the positive thing about the numbers are that Nio is on track to reach the guideline for selling 10,000 ES8 vehicles by the end of 2018. We can see that they produced 4,206 cars in the third quarter of 2018 and delivered 3,268 of them. They are saying that the month of October was impacted by the 7-day holiday, and that is why they only delivered 1,573 vehicles in that month. So if we add the 1,573 vehicles to the 3,268 already delivered vehicles, we get altogether 4,841 deliveries by the end of October. So that Nio needs to deliver another 5,159 vehicles until the end of December 2018 to reach the guideline of 10,000 units. We can see here that the monthly amount of delivered cars increases. I am curious about the numbers in November and December, which will be released very soon. Overall, it is good to see that Nio's ES8 is getting accepted by the Chinese market. I really think that they might appeal perfectly to the Chinese consumer because it is quality-wise on par with the Western cars. The range of the coming ES6 is almost as good as the Tesla, and the price is affordable for the middle class. Nio is backed by big names and on top of that has the advantage to produce and sell their cars in China first. Nio is the only Chinese company delivering their vehicles to the premium segment of the EV market so far, and in my eyes have the right management capacity and investors to be a threat for Tesla. The trade war between China and the US is benefiting Nio to gain more acceptance while stealing market share from Tesla, which cars are more expensive due to tariffs. By the time the tariffs are completely removed, Nio might have gained more brand awareness and market share to sustain their growth. The advantage to do business in China is that you have a huge labor force and less regulation in that sector. In Western countries, for example, everything takes 3 times longer because of debates and arguments, labor rights and minimum wage. It is no wonder that most Western countries need 12 months to build one road, and the Chinese are building in the same time an entire city. I think Nio realized early that this is the perfect time for change in the automobile industry. With the rise of AI technology and 5G in the coming years, people will develop deeper relationships with their cars than to just see it as a vehicle to get from A to B. If you remember the series Knight Rider with David Hasselhoff and his autonomous driving car friend Kit, you know what I'm talking about. That is why Nio dared to install Nomi, an integrated AI assistant which is learning your preferences into their cars. Nio is also not using classic showrooms for their models, as we know, but they rather plan to build Nio houses, centers where people can just sit and connect with each other or enjoy a simulation game driving the EP9, for example. They also provide Nio users with the comfort to call a charging truck via app. The disadvantage of the charging trucks and the Nio houses are the high costs, but the advantage of it is the marketing they get from this. Imagine everywhere in the city you see these trucks driving around and people hanging around in these centers. It will have an effect on the consumer so that Nio will be able to establish a brand name fast, similar to how Apple did it back in the smartphone industry. Though I see a lot of future potential in Nio, the risks are very, very high here. There are so many risks, to be honest, that I don't even know where to start. My major concern with Nio is that they don't have their own manufacturing plant yet. Like I said, before Jack Motors are producing their cars and therefore get paid, Nio states in their SEC filing that they are willing to compensate Jack Motors for operating losses incurring in their manufacturing plant. Nio said in their statement, I quote, "As of June 30, 2018, we have paid Jack Motors a total of 100 million RMB, including 65.1 million RMB as compensation for losses incurred in the second quarter of 2018. If Nio's sales are low and Jack plants loses more money, that could significantly hurt Nio's wallet. My second concern is that the ES8 and also the ES6 might have production problems at some point in the future. The ES8, for example, uses over 1,700 parts sourced from 160 different suppliers, many of them being the only supplier for that part and not having even long-term agreements. If any of these 160 suppliers have a delivery problem or file bankruptcy, the delivery will be delayed. The Nio name damaged, customers might cancel their orders, compensations to Jack will be due, and finally, Nio themselves might file for bankruptcy. And here's my third concern. Even though Nio has strong investors, they burn a lot of cash, and if the slightest thing goes wrong, I am not sure if the investors are willing to hand out more money. The worst case is when they keep diluting the amount of shares of the company to desperately get fresh capital. To date, Nio has also limited experience designing, testing, manufacturing, marketing, and selling their electrical vehicles. Their cars use a lot of software, and no one knows how many bugs Nomi, for example, has. Furthermore, the EV market in China is currently heavily subsidized by the Chinese government, and any changes can lead to problems for Nio's business. My last concern is the Chinese economy itself, which is in my opinion significantly slowing down already, which will have an effect on the car industry as a whole. I try to present you the positives and negatives as unbiased as possible, and I'm not a financial advisor to tell you what to do. I am only telling you guys what I will do, and in my eyes the valuation is pretty high with over $6 billion, but the potential could be huge. If Nio succeeds, they can be one of the global players in the globally increasing EV market. Imagine at some point in the future, all of the 1 billion cars in the world will be EV cars. Right now, there are a bit more than 4 million EV cars globally, so you can see the huge potential. I will allocate the budget for Nio stock and buy now 1/3 of it. And later, when the stock falls due to fears of a global recession, I will buy more. It is a pure gamble at this point, but I think it has a better probability of making money than with other high speculative assets like crypto. I rarely invest in these kind of high speculative stocks, but now and then I like to gamble when my gut feeling tells me to do so. I will just invest an amount which doesn't hurt me when I completely lose it. I'm excited to see how Nio will do in 2019. All the numbers that I said here, please do your own due diligence, because human beings, they tend to make mistakes, and if I did some mistakes with the numbers, I am sorry already. If you like this review, give me a thumbs up, subscribe, and hit the bell button. I will definitely do more stock reviews in the future, and I hope to see you soon then. Bye guys, take care.